Well, joining me now is Santosh Rao, Head of Research and a partner at Manhattan Venture Partners. Sorry, excuse me there. Thank you very much for joining us, Santosh. Good to see you again. Welcome back to the programme. So what can we read into these results?
Well, I think the results, the top line was as expected. It's the biggest telecom company in the world, telecom equipment company. So I think that was in line. What I was more interested in to see the diversification of their revenue sources. And looks like they are doing it. It's still a work in progress. You can see the effects of the sanctions and tariffs and all that stuff, the restrictions. You can see that in their business, but they are coping very well, diversifying into other businesses. So net, I think they're on track to do what they want to do, which is diversify and not depend on Western and outside sources for their technology and their products. So I think that's good. Overall, I think in line with expectations.
So in line with expectations, but why are consumer sales outperforming the rest of the business?
Yeah, I think the networking business is going to be a slow business, and it's happening with the U.S. telecom companies as well. So that's a steady, slow business, and that's going to grow at a low rate, but it's going to grow as we go to 5G, 5.5G, and all the other, as they upgrade the technology, the infrastructure. The real growth is on the other side, which is the smartphones, the digital assets, and they're moving into other areas. And I think, especially in the smartphone area, they are definitely doing well. They have figured out a way around the sanctions and other areas. They've developed their own operating system. So all those things will benefit their margins down the road and improve profitability. But right now, they need to invest in R&D. They really need to, in terms of the new technologies and to be competitive, they will have to continue investing. Right now, they're spending 20% of their revenues on R&D. They may have to increase it, to stay competitive. And that's what they'll continue to do. So consumer business going up from a low base, that's expected. You'll see high percentages going forward as well, but they're coming off a very low base.
So they have to keep investing in R&D and research and development, as you say, but it's costing them so much money. Why is it so expensive, and do you see that changing?
Well, it is expensive. I mean, they have to really start from scratch, so to speak, because they were totally dependent on Google and other places, the Androids of the world, to kind of build their own products. But now they have to do it really in-house, and that takes money and that takes time. So, and they have to invest in talent, and there's so many other things that they have to do to really get the ball rolling and stay competitive. So that's where we are. I mean, it's really, the cost curve is pretty steep at this point. It'll level off at some point pretty soon, because they are aggressively doing it. And that's the thing. Then the whole country's with them. There's a nationalistic spirit in there. The government is behind them, kind of, sort of, not even though not directly, but in terms of regulations and all that, they are very friendly, very constructive. So I think they will help out the technology companies going forward. But they have to keep investing, because it's really it's them against the whole rest of the world, so to speak, and they will do it. They have the talent, but it takes time, and they need to keep on doing it.
All right, Santosh, really great to get your thoughts on this. Thanks so much for joining us. That's Santosh Rao, Head of Research and a partner at Manhattan Venture Partners.